Hi everyone, this is Robert Weinberg, and on this channel we help individuals create freedom through expert financial and mortgage strategies. If you're new to the channel, please go ahead and click the subscribe button and also hit the bell so you get notified on all of our future videos. On today's lesson, I want to talk about the most popular loan program for self-employed and 1099 contractors in 2019. I did a seminar over the weekend for first-time buyers, and one of the most common questions I was getting was what programs are available for the self-employed and 1099 contractors, and how do those programs work? So I thought it was timely to put this video together. I want to talk about some of the different programs that you'll encounter that are the most flexible when you're self-employed or 1099. So the first program is your conventional loan. Now, typically a conventional loan does require 2 years tax returns, but there's a specific type of conventional loan that we can do through Freddie Mac and sometimes through Fannie Mae that only requires 1 year of tax returns. So for self-employed people who maybe have income that's going up or down, maybe a few years ago your business wasn't doing very well and then more recently it's picked up and you want to purchase or refinance a home, a 1 year tax return program can be a great option for you. Now the caveat is that typically you will need 5 years of self-employment in your company in order to qualify for just the 1 year of tax return. And it would be the most recent year. So right now it's the middle of 2019. So for those that are qualifying for this type of loan, they would look at 2018's tax return and specifically your net profit on that tax return from your business. So that would really be a great option. The next very popular option right now is a non-QM loan. I've talked about this in some of my other videos. So a non-QM stands for a non-qualified mortgage. And the reason it's non-qualified is because there are not tax returns used with this type of loan to validate your income. What's used instead is either 12 months or 24 months of typically your business bank statements. So the underwriter will look at your business bank statements for the last 12 or 24 months. They'll add up all the deposits that are coming into your bank account in that timeline, and then they'll average those out over the 12 or 24 month period in order to come up with a baseline figure. They will deduct off expenses from that, but typically the expenses they'll deduct off are just a percentage based on the type of business that you're in of what the normal expense would be. So the typical I've seen is somewhere between 20 and 30% they'll take off of those total deposits to come up with your net usable income to qualify for that mortgage. Now it's important to understand with that type of loan, there are no 3% down options or no money down options. With a non-QM loan, the lowest that I've seen is a 5% down. So typically it's going to be either 5 or 10% down payment as your minimum down payment depending on your credit score. And also, these loans typically will require at least a 640 mid-FICO score in order to get this type of loan approved. The next program we'll talk about is the FHA, and you may be wondering, well, why would you talk about FHA as a flexible program if it requires the full 2 years of tax returns? Let me explain to you. FHA has the most liberal guidelines when it comes to debt-to-income ratios. So even though you may have shown a lot of deductions and expenses on your tax returns, FHA will allow you to go up to a 56.9% debt ratio on the back end. And what that means is that all of your debt, including the new mortgage, taxes and insurance, as well as the mortgage payment on the new loan you're taking out, will be added on with all your current debt. And as long as that total amount is less than 56.9% of your gross income, then at that point they typically will allow the loan to get approved. Now it does depend on your credit, and those with credit scores less than 640 can sometimes be limited on that back end ratio. But for example purposes, I will say I have seen quite a few clients getting approved with that 56.9% back end ratio, which is very liberal. Conventional loans and even non-QM loans are typically going to be capped between 45 and 50%. So even though you may not have shown as much income on the 2 year history using an FHA loan, we can expand out the flexibility a little bit. It can expand out how much you can get approved for. And also an FHA loan only requires a 3.5% down payment. So it can be a good option. And it is important that you work with a qualified mortgage advisor to explore all these options and see really what's going to work best for you in your particular circumstance. Now you may be asking, well, I've already filed my returns and I don't really show a lot of income, so what can I do in these cases? Well, as we talked about, a non-QM loan may be an option where they won't look at the tax returns. But if you're trying to get into one of the lower money down loans, like a 3% conventional program or a 3.5% down FHA loan, then what you're going to want to do is some reverse engineering, and you're going to require that you have a qualified mortgage advisor to work with you to look at your most recent year or two of taxes and look at how much profit you're showing, and also look at the type of loan you're trying to get approved for. And they may be able to make some good recommendations to you on how much income you need to show on your net profit in order to qualify for the loan that you're looking to get. So it can require a little finesse and a little flexibility, but rather than just writing off any and everything you can and trying to pay as little tax as possible, when you're trying to go and get qualified to buy or refinance a home, you may need to show a little bit higher profit and lower expense just for a year or two in order to get this strategy put in place so that you can buy the home or refinance the home that you're looking for. So I hope that this has helped and given you some good value. I hope that you'll share this with others that may find benefit in it. I hope you learned something, and I do hope also that you'll comment below. So please follow me on social media, and if I can be of assistance to you or anyone you know, go ahead and reach out to my office directly. Talk to you soon.